Hey Bowtie Nation, Joseph Hogue here with your weekly stock market update, 9 a.m. Eastern every Monday morning with the stocks to watch and the stock market news you need to see. And Nation, we're just getting started on our 2025 investing plan. You know I always like to start with those big picture themes, the broader forces guiding the market and the groups of stocks in those. Once you have an idea of that bigger picture, the trends you think will do well, there is no better place to start than exchange-traded funds or ETFs that are going to give you that overall exposure to those themes. I'll highlight 10 of the best ETFs to buy this year for different themes, along with how to use them to find the best stocks to buy. But first, we're getting started on those best stocks of 2025, and I want to take you along with us. Over the next 2 months, I'll be highlighting the best stocks to buy in every theme, from dividends to growth, the headline stocks that could surprise, and the news that could drive the stock market. And because I think we need more accountability here on YouTube, this year I'm tracking those stock picks. Look for the link in the description below for access to our best stocks tracker. I'll add stocks to the list and track returns against the S&P 500. You'll get free access to the updated list anytime you want, and a heads up before the videos come out, so check out that link below. Back to our main topic and starting that 2025 investing plan with the best ETFs to buy, because while ETF investing might not be as exciting as finding that next hot stock, it is going to do 3 things for your portfolio that are critical for every investor. Nation, you know I love to pick stocks there on the channel, but do not neglect ETFs as part of your strategy. And here I've separated these 10 must-watch ETFs into 3 groups. First are the theme ETFs that could be the biggest returns for 2025. These are the stock themes like cybersecurity, AI, and robotics that are in those multi-year growth themes that we love here on the channel. The next group of ETFs are going to be your must-own asset classes, the singular funds that are going to give you the market return in stocks, bonds, and real estate. It should be the backbone of every investor's portfolio. I'll then wrap it up with 4 more ETFs in different themes, ETFs that might not be right for everyone here, but could fit with your portfolio to give you exposure to a specific growth or income focus. Stick around and I'll also detail those 3 reasons that every investor needs to use ETFs as part of their investing strategy. And first up here is my favorite theme for long-term growth, cybersecurity, with the Amplify Cybersecurity ETF, ticker HACK, a fund of 25 companies in the space with all the leaders like Palo Alto Networks, Fortinet, and CrowdStrike. Nation, while AI gets all the headlines, growth in cybersecurity has been on for more than a decade. With a 20-fold increase in the number of malicious programs just since 2014 and the potential for an exponential threat increase through artificial intelligence, cybersecurity stocks are about as close to a sure bet as I've found. And this cybersecurity ETF is a great way to get that one-stop exposure to the theme, but it does also hold a lot of stocks that are only loosely related at best, like Cisco Systems, Northrop Grumman, and General Dynamics. Now I'm going to show you how to fine-tune your strategy later, but it's still a great ETF to start with. Another theme that cannot be neglected for 2025, the use of AI to drive robotics, found here with the Global X Robotics and AI ETF, ticker BOTZ. The ETF holds 46 stocks in that intersection of artificial intelligence and robotics. The global robotics market is expected to surge to a $280 billion opportunity from just $80 billion in the decade to 2032, double-digit annualized growth. Here again, you lose a little of that specificity with that ETF, with some of these stocks in AI focused while others more robotics. But both themes are set to perform, and what I like about this one, it gives you access to many of the stocks that you might not have otherwise, like those trading on the foreign exchanges. Buying the ETF gives you international exposure to robotics makers like Keyence Corporation in Japan or Swiss ABB Limited. Our next ETF here is broader but still a must-own growth theme, the Spider S&P Software and Services, ticker XSW, up 32% last year and 660% since its 2021 inception. The fund holds shares of 147 companies across software and technology services like applications, interactive entertainment, IT consulting, and systems. Nearly 70% of the fund is in application software stocks, which is really that stronger growth theme, and you're going to recognize some of these as the best growth names here, like SoundHound AI and Palantir Technologies. Both those stocks were up 164% in my portfolio just last year, with the long-term upside still intact, even if they are a little bit expensive right now. I'll highlight those 3 must-own asset ETFs next, but the bigger picture here is really what ETF investing is going to do for your portfolio and why you cannot neglect this part of the market. First, ETFs are going to give you that broad exposure to the biggest themes. Instead of having to dig through financial reports, analysis, and news on 25 stocks in the cybersecurity theme, you can buy the ETF and just enjoy the upside from the entire group. It's a much easier way to invest, and the best if you're not willing to spend those hours necessary to analyze each stock in the industry. ETFs are also going to give you that diversified safety, not just in each theme, but across the market as well. I'll show you ETFs next that are going to give you a one-stop return on the entire stock market, but Even in those focused themes, buying an ETF means the safety of spreading your risk across dozens of stocks. That means you won't see your portfolio crash when management at a single company decides to bet free cash flow on the ponies. Best of all, though, ETFs give you an easy way to find the stocks in each theme for further research. Instead of spending an hour watching videos or reading articles to find those stocks in the cybersecurity theme, you can always just go to the ETF, scroll down to the holdings, and see all 25 stocks held in that theme. Stocks are sorted by weight in the fund, so usually the largest or the most important in that theme. It's an easy way to start your research into the individual stocks, finding the ones that are a pure play on that theme and with the competitive advantage for growth. For our broader market ETFs, we can start with something like the Invesco QQQ Trust, which gives you the top 100 non-financial companies on the Nasdaq, like Apple, Nvidia, Microsoft, and Amazon. So owning the QQQ is just an easy one-stop for the returns in the tech-focused market. Now, of course, if you're also holding a lot of those tech-themed ETFs or individual stocks, maybe you want something broader like the Vanguard Total Stock Market Fund, the VTI, which holds over 3,600 stocks in the US market. Now, I know bonds have been total dog shit for the last couple of years, but I'd still hold about 10% of my money in a bond fund like the Vanguard Total Bond Market, the BND, with its 3.5% dividend. The ETF holds over 11,000 bonds, with 68% of the portfolio in US government bonds and the rest in high-grade corporate bonds. Even as I think the bull market has room to run, stocks are undeniably expensive, and holding some of my money in a bond ETF not only protects that part of my portfolio, but also gives me ready cash to buy in on the opportunities when stocks fall. Those of you out there in the nation know I got my start as a real estate analyst and love the RE Select Sector Spider, ticker XLRE, for that easy way to invest. The fund holds the 31 real estate investment trusts in the S&P 500, the biggest REITs including Prologis, Equinix, and American Tower. Holding real estate stocks through the fund, besides that income from the dividend yield, also helps smooth out those ups and downs of the stock market by putting some of my money in that physical asset. These next 4 ETFs might not fit every portfolio, but depending on your goals are definitely ones to check out, starting with the JP Morgan Nasdaq Equity Income, ticker JEPQ, with its 9% dividend. This is one of the best managed income funds I've seen, holding stocks in the Nasdaq index and then selling call options against them for that higher dividend. Besides the dividend cash flow, it's also produced a 15% price return over the last year, so if you're someone that wants that monthly cash flow plus the upside, this is one to buy. One we've never talked about on the channel before, the Global X Video Games and Esports ETF, ticker HERO, is another great play on a rising theme. Besides already solid growth in gaming and esports, mixed reality headsets could unlock a new growth era in the group. The fund holds shares of 43 companies developing and publishing games, as well as esports distribution and virtual reality. Like the other ETFs, besides that overall exposure and which stocks make up the theme, it's also going to give you access to other stocks you wouldn't otherwise be able to buy, like Japan's Nintendo and the Konami Group. The strongest theme ETF last year, up 49%, was the VanEck Semiconductor Fund, ticker SMH, holding 25 names in chip makers and throughout the semiconductor supply chain. Of course, you've got Nvidia leading up the list, but just about every other headline stock of the year, including TSMC and Broadcom as well. Possibly the next big theme within AI is in cloud stocks, and the Global X Cloud Computing ETF, ticker CLOU, a fund of 37 stocks in software, platform, and infrastructure as a service, managed server storage, and edge computing infrastructure. Most of artificial intelligence will be managed through the cloud, with Gartner forecasting a 150% increase in spending on cloud services by 2030. These are some of my favorite individual stocks as well, including Shopify, Snowflake, and Salesforce Inc. Taking a look at the stocks I'm watching this week, first up, Walgreens Boots Alliance, ticker WBA, reports its earnings on Friday, and we should get an update on the reported talks to sell the company to a private equity firm, Sycamore Partners. I've been watching this one all year as Walgreens sold off assets to pay down debt, a classic clue that a company is seeking a sale. No proposed price has been reported, but at even a multiple of 0.3 times enterprise value to revenue, the company should fetch at least between $12.50 and $15 a share. The negotiations could always break down on this, so there is still a lot of risk in a company that hosts $33 billion in debt, but the upside is there as well. Rivian Automotive, ticker RIVN, was highlighted in Friday's video as one of my favorite stocks for a potential 100% return, and damned if the shares didn't jump 20% on that day. I prepared that video Thursday before the company reported final 2024 deliveries of nearly 50,000 vehicles after previously lowering that target. Rivian also reported that a component shortage was no longer affecting production. We'll still have to wait for February 20th for its fourth quarter earnings, but I pointed out Friday that Rivian has the funding in its Amazon and Volkswagen partnerships to survive as it scales its production. The company is now producing as many vehicles as Tesla did in 2015, so it has a long way to go, but if If it can reach that point of scale and lower costs per vehicle, shares would be a steal at this point. SoFi Technologies, ticker SOFI, plunged as much as 8% Thursday after an analyst at KBW downgraded the shares to underperform, though also raising its price target to $8 each. Now folks, when I was working as an analyst, a lot of these guys couldn't forecast the weather if they were standing outside, but he does have a valid point here. SoFi has been my biggest winner, up 167% and over $250,000 profit, but it is just too damn expensive at a 2.5 times price to book value. I still think the company has that strong competitive advantage in banking, but I'm not adding more shares above $12 each, and even that would be richly priced. In the meantime, I think shares of Ally Financial, ticker ALLY, are the better deal at just 0.88 times book value, and I'm buying there. Showing you the bigger picture here with the SectorSpiders.com sector tracker. 4 of the 11 stock sectors closed higher last week, with the safety and the rate-sensitive sectors outperforming. Energy stocks posted a strong rebound, though there isn't much fundamentally to push the price of oil much higher, so further upside there might be limited. Stocks in the S&P 500 are now down 1.8% over the past month. Growth sectors like communication services and technology are doing relatively well, which is supporting that investor sentiment for the bull market. Now watch those two sectors, though, into earnings over the next few weeks. If they can hold on to those returns or even turn more positive, the broader market should rally as well. If those two sectors break down, though, the hit to sentiment is likely to drive us into a correction of at least 5 or 10%. We will see the monthly non-farm payrolls report, that jobs report Friday, which is important in its clue into the economy, but the market is still going to be waiting for the following week's data on inflation and the start of Q4 earnings season to really change sentiment. Until we see that update on inflation in the CPI report on the 15th and the big banks starting reporting on that same day, we're likely to see more of the same volatile stock market and up and down through the week. Earnings reported by S&P 500 companies are expected to be very strong, though, up 11.9% in the fourth quarter versus last year. It will mark the highest earnings growth since Q4 of 2021, and that should be supportive of stocks. Stocks in the financial sector are set to lead with earnings growth of 39% in the quarter. Now, beyond that strong earnings growth, management at banks are likely to point out a strong year for deregulation and profits, all of which could breathe new life into the stock market enthusiasm. Get free access to our 2025 Best Stocks Tracker and advance notice when new stocks are added to the list with the link in the description below. Or click on the video to the right to see my complete 2025 outlook, the stocks and sectors I'm watching. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.